is the recovery in Australia's economy. We're all very well aware of that story. We know, say, for example, that house prices started to grow. That means there's more activity in the retail sector as well. The people have really, in many ways, shrugged off the effects of coronavirus. And so despite the fact that on an annual basis, you're going to see potentially the economy in the past quarter on an annual basis down some 3.8%. This time that's expected to have moderated to the annual fall in the economy to be down by around 1.8%. But do remember at one stage they did consider that it could be down by as much as 5%. When it comes to the actual quarterly numbers, there's a big rebound here. Previously, in the previous quarter, it had been up by some 3.3%, another 2.5% growth in the economy. So notwithstanding the shock of coronavirus, we're going to get this number right now. On a quarterly basis, what we're seeing is that the GDP has grown by 3.1%. So in other words, much stronger than even the forecast that had come out from Reuters. Some 16 economists on an annual basis, the economy has shrunk by some 1.1% as compared with the forecasts out there of saying it would shrink by 1.8%. Now, this is all going to be very strong for the dollar, but it really doesn't take away some of the other risks that are sitting out there in the economy, and that is the economy is simply growing too fast. That could see long-term interest rates rising, could see the Australian dollar rising as well, and put pressure on the Reserve Bank with its quest to try and keep interest rates low, to try and keep the economy, if you like, stimulated for the next 3 years.
Yeah, well, I know you were at that National Press Club speech where we heard the Reserve Bank governor there say he was all about wages. Until they increase, he won't be touching the interest rate. But it might sort of, some other matters might start pressing him, I guess, including the Aussie dollar. Really interesting to see one stat here. Household saving, as we just recap here. I mean, annual growth, 1.1% down. Yes, it shrunk, but gee, that's a small figure considering a pandemic. Household saving ratio has gone from 18.7% down to 12%. This shows that people that were so scared of spending during COVID, and some people were getting extra money, they're actually starting to spend that money again, Ross.
Yeah, exactly. So if you consider you go back a few quarters, Australians were saving at that rate, the highest rate pretty much on record, some 22% of their income they were saving. As you point out, that's fallen to 18.7% by the end of last quarter, and now by the end of the year it's gone down to some 12%. What that shows is Australians are more prepared to borrow, they're more confident in their jobs, and as a result they are spending. Now we see that in all of the retail stores. You've seen it in the results from Woolworths, you've seen it from Coles, you've seen it from some of the big department stores, you've seen it in car dealers as well. So Australians have been prepared to spend, and that's the reason why you've seen this enormous rebound in growth in the Australian economy. Notwithstanding this, if the dollar does go higher, it becomes a bit of an anchor on the Australian economy. And so one of the important parts about this is just to keep a little weather eye out on those long-term interest rates, on the Australian dollar, because they're the types of things that will temper it. In the very short term, this is precisely what the government wants. This is precisely what the Reserve Bank wants. It wants people in jobs. It wants the unemployment rate coming down quickly. And that's one way in which the government actually gets repaid some of the many billions of dollars, the tens of billions of dollars that have been borrowed and spent to support the economy over the past 12 months. So this, to my mind, is going to give the Reserve Bank, which of course kept interest rates on hold yesterday yet again and will for the foreseeable future, it at least tells them that they're on the right track to getting recovery in the Australian economy. But the one thing that they've got to be cautious of is that they don't let prices and wages potentially spin out of control. And that would mean rising interest rates. If that were to happen, house prices, people right now being heavily indebted to go and buy those prices, encouraged by interest rates in the 1%, that's when it would actually turn turtle for many of those people.